Very good afternoon. Let's get into the markets now. Asian stocks edge higher today, lifted by strong corporate earnings that kept technology sector valuations near record highs as investors awaited a key U.S. inflation report expected to influence bonds and the U.S. dollar. Meanwhile, a deadline for new U.S. tariffs on Chinese goods expires tomorrow, with widespread expectations that it will be extended. Japanese markets were closed due to the celebration of Mountain Day today. The Hang Seng Index rose by 0.19%, while the Shanghai Composite Index gained 0.34%. US stocks ended last Friday on a high note. This was driven by a combination of positive earnings news, with Apple shares still firing ahead due to its announced US investment plan and an expectation that the US Fed would cut rates in September. President Trump's nomination of Stephen Mirand to the Fed board was also thought likely to assist in helping to shift the Fed's monetary policy outlook. The Dow Jones Industrial Average rose by 0.47%. The S&P 500 gained 0.8%, while the Nasdaq Composite Index advanced by just under 1%. Looking at local indicators, currently we see that the all-share index is down 0.1% at 100,738 index points. It did shoot through 101,000 index points at some point. Looking at the local currency, we see that the rand is trading at 17.73 against the US dollar, 20.64 vis-a-vis the euro, and 23.94 against the British pound. Gold is trading at $3,359 an ounce, platinum at $1,318 an ounce, while Brent crude oil is around $66, and 63 cents a barrel. All right, let's get into conversation now with Victor Seanie. He's a portfolio manager at Benguela Global Fund Managers. Victor, thanks very much for joining us. So while there's an anticipation that the US Fed will cut rates going forward, there's also key CPI data as well as PPI data coming out of the United States. What's the expectation there, and why are we seeing markets generally up today, although we do see that our local market is on a downer now?
Hi, Norm. Thank you for having me. Expectation for CPI is for a little bit of an uptick. That's primarily due to the impact of tariffs that are filtering through, especially for hard goods among consumers. So in June, we had CPI coming in at 2.7%, and the expectation is for about a 3% headline CPI number. On the markets front, on the JSE, we see that the resources are giving back some of their gains slightly. It's down 2% today. Last week was a very strong week for the golds and the platinums. They were up 11% in last week alone. So they are the biggest drag on the market today. On the upside, on the JSE, the banks are showing a strong performance. And then globally, up in Europe, we have the major indices of Germany and France that are down today. And that's primarily due to the summit that's happening between Trump and Putin at the end of this week. So we've seen defense stocks down significantly today. Bear in mind, defense stocks have been among the strongest performing stocks globally, given the expectation of higher spend on defense among European nations.
Yeah, no, it does seem rather cynical that we'd have defense stocks on a downer, perhaps in an anticipation that there will be good news come Friday when President Trump and Putin meet in Alaska to discuss the very issue of the Russia-Ukraine war. But it seems as though Ukraine is not going to be party to it. So how hopeful are you that there'll be a breakthrough? And apart from the likes of, your defense stocks, what other market elements are likely to be affected, whichever way the actual meeting goes?
Yeah, at the moment, the feeling is that of cautious and limited hope, particularly since initially Vladimir Zelensky has not been invited to this presidential summit. There are signs of optimism. One, this is the first presidential summit between the US and Russia since 2021. The venue of choice, Alaska, that is auspicious, given that it's somewhat neutral. It's outside of Europe. And historically, it speaks of the ties between the US and Russia. Russia sold Alaska to the US in 1867. And so U.S. has signaled that they are open to involving Ukraine in this discussion, or at least consulting with them closely. And so that would really be the key swing factor as to whether we'll see a positive outcome out of these talks. Market bookmakers have put probabilities of a positive outcome, excluding the Ukraine, at only between 20 and 30%. So I think it's really crucial that Ukraine forms part of these talks. We know Zelensky has adhered to the principle of nothing without Ukraine.
Absolutely.
Ukraine's involvement. But it's a positive step, just the mere fact of having this meeting. And then finally, look at what might be affected on the market. If we have a positive outcome, that would be broadly positive for a number of economic indicators. One, energy prices should reduce. That would be very positive for Europe. We should see soft commodity prices come down, particularly wheat and corn. We know that Russia and Ukraine accounts for about 30% of global exports of wheat. And then further downward movement in the defense stocks is what we should expect if there's a positive outcome.
Yeah, we wait and see. And then I want you to focus back on our local market now. It's tapered down after having rushed through 101,000 index points. I mean, of course, markets go up and they go down, but how sustainable do you think this thrust ahead by the local market, the ALSI, the All Share Index, can be, given all the challenges that we are discussing?
Yeah, it's unlikely for a market to return about twice or thrice its usual levels, and for that to be sustained over a long time. So I would think that this market level is at risk of being disappointed. For year to date, only 10 stocks have accounted for about 94% of the JSE's move year to date. That's the three big gold stocks, the three major platinums, and then we have Naspers Process. I think Tencent does have a little bit more in its valuation, so it still has some room to run. But then the other two factors are MTN and BAT. And at these levels, I think MTN is fully priced. So I think the second half of the year should definitely see a much slower rise in the JSE than the first.
Victor, your very quick comment on the manufacturing production number that came out for the month of June, that was up 1.9% year on year. And it's a pretty good number given that manufacturing has been negative for most of the year.
Yeah, very important number there. Very positive for the employment situation in South Africa. We know that manufacturing production had been in a negative streak for about 6 months. Fortunately, that streak was snapped in May. Mainly due to basic iron and steel. And so we saw that the main sectors coming through in June, was food and beverages. I think that's very positive because those are pretty labor intense parts of the economy. And then the other part that was up was the petroleum sector. We saw Sasol. They are undergoing a turnaround in their operations, and so we see some of that playing out in the month of June. So very positive numbers, and sales were positive as well.
All right. Thank you so much, Victor, for your time and your insights. As always, that was Victor Seanie. He's a portfolio manager at Benguela Global Fund Managers.